India and the United States are edging closer to a major trade breakthrough, one that could reshape markets, impact farmers, and may even alter global energy politics. After months of tension, negotiators from both sides say that the outlines of a new trade deal between US and India, headed by President Donald Trump and Prime Minister Narendra Modi, are finally taking shape. Under the emerging agreement, India is set to offer limited access to its agri market that remains politically sensitive. In return, India has secured a better deal than its global competitors, says Union Minister of Commerce and Industry Piyush Goyal. He says PM Modi's rapport with President Trump helped to slash US tariffs from 50% to 18%. For American exporters, the biggest win is the elimination of duties on tree nuts, fruits, vegetables, wine and spirits. India will also cut its tariff on US industrial goods to zero, down from nearly 14%. Piyush Goyal said, "This is a deal that will open up huge opportunities for our labor-intensive sectors, textiles, leather and footwear, gems and jewelry, rubber goods, machinery and aircraft components." For Trump, this deal could not have come at a more critical time. His administration is facing political turmoil at home after the federal agents killed 2 US citizens during an immigration crackdown in Minneapolis. A strong foreign policy win could help shift the narrative. India has committed to significantly ramping up purchases of American products, everything from petroleum and aircraft to defense equipment, telecom goods, and pharmaceuticals. This is part of a massive multi-year commitment to buy $500 billion worth of American goods. Officials say these purchases won't happen overnight. Instead, India will scale them up gradually as a part of a longer-term partnership. Trump administration claims one of the most significant geopolitical outcomes of this agreement is that India has committed to halting the purchase of Russian oil. In exchange, the US will remove 25% punitive duty imposed last year. US officials say the move was made easier by easing sanctions on Venezuelan crude and offering India a path to resume purchases from the South American nation. However, sources say that India's decision would be based on national interest and there are no restrictions on buying oil from Russian companies that are not sanctioned. Not a home run for the US. Yet, Washington did not likely get everything it wanted. India appears to be holding firm on its most politically sensitive farm sectors, including rice, beef, soybeans, sugar, and dairy. These commodities were also off the table in India's recent agreement with the European Union. Piyush Goyal also gave an assurance in Parliament that India's sensitivities in the fertilizer and agriculture sectors, including the dairy sector, have been secured. Even after the reduction, the new 18% US tariff on Indian goods remains slightly higher than that for Japan, South Korea and the European Union. But it is lower than India's Asian competitors such as Vietnam, Thailand, Indonesia and Bangladesh. And the markets reacted positively the next day. Sensex rose 2,000 points, marking its biggest single-day gain since November 22, 2024, as FPIs have returned as big buyers. The mood overall is optimistic and celebratory. Piyush Goyal has said that the first tranche of the deal is expected to be signed in the next few days. The formal legal agreement would be ready by mid-March. Follow the Hindu Business Line for more updates.